putting this thing in context, yes, the global economic crisis and the global banking crisis has and is a significant reason that the Irish banking system is in difficulty. But from our point of view, it goes further than that. There has been a malaise in this industry for the last 10 or 15 years. And we've cited that on more than one occasion. We've been out there when the ICI debacle started, when you move towards in relation to the issue in relation to dirt, when you go forward and look at the issues in relation to the NIB investigation, and when you go forward and look at the overall malaise in relation to overcharging. At every point in time in relation to that debate, we've been identifying that it's the culture of the changing in the industry that has a potential to cause a huge difficulty. And what we've tried to do as far back as 2004 to the Joint Oireachtas Committee, the Public Finance Committee, we submitted in a very extensive way that what needed to happen is a fundamental change in the culture of this industry, away from what is now geared as profit before staff and customers, maximising profit at the expense of the traditional prudent approach to banking. And we've articulated that very, very strongly. And it gives us no pleasure today, and we've been consistent, is to say we told you so. But our focus today is what has to be the future direction and what needs to be done. So what we set out in terms of our paper today is what we felt is a holistic approach to the steps that need to be taken in conjunction to whatever government decision has been made. The first point we're making in relation to this would be a total futile waste of taxpayers' money if there isn't an exercise undertaken to examine what has happened and what has brought us to this stage. Let's not forget that 3 years ago the Irish banking system was one of the most profitable in the world. The profit per employee was one of the highest out there, not only in Europe but right across the international market. And from our point of view, how that has changed to such a malaise at the moment, despite the fact that everybody criticises, nobody has established the facts that brought us to that level. We have historically talked about a commission in banking, and there seems to be a mood at front that there needs to be a public accounts kind of dirt-style inquiry, and we would fundamentally support that. And would take that view that should not be about scapegoats, or should not be about playing politics with this issue. It should be about establishing the facts of what went wrong with the industry, but more importantly, giving recommendations and directions as what should change. The second area we focused in on in terms of our area is in relation to the issue of regulation. And we believe that there needs to be, in parallel with this, a number of regulatory changes that are actually make an impact for the future. Some of these are structural, like IFSRA being merged with the central bank, which is part of government policy. Others are more fundamental. There is need for qualified staff to be recruited in the regulatory agencies to provide a basis to be able to monitor and evaluate what's happening in banking. And that's no criticism of the institutions of the central bank, or indeed IFSRA, but it's about what has happened in the past as being civil service overviewing an industry without a knowledge and an expertise to establish what was going wrong with that industry. We're also very, very clear that regulatory appointments should be made to the board of banks. At this point in time, there's no regulatory interaction except in terms of key committees. And our worry would be that in terms of the future direction of the industry, particularly of significant investment, so whatever decision is made, investments are going to have to be made in the industry, that it's done in a way where regulators can overview not just the issues of prudential, or not just the issue of consumer or competitive issues, but cultural issues that need to be addressed. And we need to look at an oversight mechanism of the regulator, particularly if NAMA is to be successful, that they would have a role to evaluate and review in terms of the credit issue, how that credit is being supplied to the economy as a whole. And finally, and very strongly, we believe we need to have in place legislation to protect whistleblowers. You, members of the media, would be aware that it was the media that broke the story in relation to many of the overcharging issues. It was the media that broke the story in relation to the NIB investigation. So there isn't proper structures in place. And what we have shared in the past is the significant fear that operates in our industry, and the culture of fear that operates in our industry, that prevents bank officials saying it as what it is, and using IBOA The Finance Union to reflect that as an important issue for us. Very importantly, in terms of our issue, we set out the need to change the culture. And we've said consistently, we do not see any evidence of cultural change in our banks today. Culture has to be changed, and we've identified that in 2007, we did a Red Sea survey of our members where we surveyed independently over 500 of our members across all banks. And what they said very clearly was their experience was that 87% of them believed that the bank's focus was maximising profits at the expense of customers and staff. And only 2% disagreed with this analysis. And equally, 56% of our members said at that time that the bank were forgetting customers in the drive to profit. So what we're saying clearly is there needs to be cultural change in the industry. And we later talk about post the initiative that will be taken in the next number of weeks, what needs to happen. In relation to the current debate, we have looked at the three options. On the issue of nationalisation, we genuinely don't support nationalisation. And the debate on nationalisation, although emotive and is a simple one to understand, we believe will have huge implications in terms of debt and in terms of the recovery of this economy. I think what we do need to look at is an analysis that allows banks to be supported, to allow for certainly equity and certainly, very importantly, lending to be done and not focused on the institution of the state. And we would support a number of people recently that have come out and said nationalisation is the Armageddon, not just for our industry, but also, I believe, for the economy as a whole. What we're realistic to say, however, that in the context of the future direction, there will be greater state ownership of Irish banks, and that, we believe, is an inevitable result that's going to happen with the debate and with NAMA as it transpires. But very clearly, from our members' perspective in terms of their jobs, the terms and conditions of employment, we see nationalisation as the worst option available. With regard to the idea of the good bank and the bad bank, we share the analysis that if we understood fully what it entailed, it may have some scope, but only after the toxic debts and the bad assets are to be addressed. And we therefore are not in the view that we have got the time to develop strategies and going to the ECB and getting support for these initiatives, particularly at a time when we need harsh decisions. The reality is that this economy is floundering because of the banking crisis, as well as the other pressures that's on with public debt. And it's 12 months since the government has intervened with their guarantee. And we don't believe we have the time to pursue other strategies. And it's with that and that reason alone that we come to the conclusion that NAMA, as set out by the government, does seem to be the only realistic attempt to address the future of the industry. And we recognise the public concern in relation to that. And we also recognise that people may view this as bailing bankers out or bailing property developers out. And we're very clear in terms of our analysis that that should not happen as part of this scenario. And we set out in very clear terms that what we're saying today is not an unconditional support for NAMA, but it's a limited or what I call a conditional support on the basis that fundamental changes have to happen. And we set out in our document, in terms of the restoring confidence in the industry, the kind of initiatives that have to take place to address that. And obviously the first is a fundamental change in the corporate governance structure of the banking industry as we know it. We need a board structure and a representative structure that's far more widespread than businessmen in different clubs coming to head off and set up in directorships of various banks. And we're very clear that staff should have a role in the banks, that consumers should have a role in the banks, that government representatives should have a role in the banks, and that regulator and regulatory mechanisms should have a role to play in the banks, because it's everybody's future that's going to be played with. We're also saying very clearly that there has to be a mechanism that establishes that if this is about giving credit to the banks and providing that liquidity to the economy, it has to be evaluated and has to be judged. And we would be concerned that the banks may take the capital they're going to have to get from government and use it to reduce their loan to debt ratio and not focus on making equity and making liquidity available to the economy as a whole. In essence, if this is to be supported by the European Commission and by the European Central Bank, it will be viewed as quantitative easing, and there has to be evidence that there must be liquidity in the market. And very clearly we're talking about our strategy to include mechanisms to monitor that.